Hello students, welcome back to the channel. I hope you are all doing good. So in this lecture we will talk about partnership firms. Okay, now with this video we will start our class 12 topics. I hope you have seen the previous videos. Okay, and if you have not seen the previous videos, I request you to please watch the previous videos. There are 7 lectures on basics of accounting, and that lecture will be very helpful for you. Okay, so if our basics are strong, will not face any problems with the future concepts. Okay, so let's start with today's topic. So today we will talk about partnership firms. We'll talk about partnership. Okay, now in your class 12 syllabus, you will see in your part A there are basic concepts of partnership. Then after that, change in profit sharing ratio. Then after the admission of a partner, retirement of a partner, death of a partner, and dissolution of a partner. Okay, partnership firm. So these are all related with partnership firms and a partner. Okay, so now let's begin with the lecture, and now we will discuss, first of all we will discuss what is partnership. Okay, so what is a partnership? Partnership is a relation between two or more persons who have agreed to share the profits or losses of the business which is carried on by all or any of them acting for all. Okay, now partnership is governed by Indian Partnership Act 1932. Okay, you may get this in your objective. Okay, Indian Partnership Act 1932. Now what is a partnership? If we have to understand with an example. Okay, so say for example, this is a person called Mr. A. Okay, and there is a person called Mr. B. Now Mr. A and Mr. B are friends. Okay, they are good friends. Now one day they have an idea of a business, so they decided to start a business. Okay, now both of them, there are two friends, right? They cannot start a sole proprietorship. Okay, so what they have decided? They have decided to start a partnership firm. Okay, they have decided to start a partnership firm. Okay, now partnership firm basically will be the name of the business. Okay, so for example, A and B and company. Okay, this is the name of the business. So Mr. A and Mr. B will be partners in the business. Okay, simple as that. Now let's talk about partnership deed. Partnership deed. Okay, what is a partnership deed? This is a very important concept. What is a partnership deed? Partnership deed is a written document which regulates the rights and responsibilities of each partner. Okay, it binds the partners against the acts which are outside the Partnership Act. Okay, now what is a partnership deed? Partnership deed is a written document. Okay, written document which regulates the rights and responsibilities of each partners. Okay, it binds the partners against the act which are outside the partnership deed. Okay, basically it is a legal document wherein rights and responsibilities of a partner will be mentioned. Okay, what can a partner do, what can a particular partner, what rights the particular partner has, and he will have to act according to the partnership deed. Okay, they cannot do anything, they cannot do any act which is not allowed by the partnership deed. Okay, so let me show you how a partnership deed actually looks like. What is a partnership deed, right? Partnership deed is a written document, right, which regulates the rights and responsibilities. Now this is how a real partnership deed looks like. Okay, so this will be in a stamp paper. This will be in a stamp paper. You have to pay the stamp duty for this. Now see, this is a partnership deed. Okay, this deed of partnership is made on 27th day of February 2013 between Kamaljit Singh, Parminder Kumar, Gurmeet Singh, Neelam Rani. Okay, so basically there are 4 partners. Okay, all the names of the partners will be mentioned in the partnership deed. Okay, now see, what are they carrying, which business are they carrying? Whereas all the above mentioned parties are carrying on the business of flour mill under the name and style of Messrs B&B Flour Mill. Okay, so the name of the business is Messrs B&B Flour Mill at Morinda Road, Chambukar Sahib District, Ropur, in partnership with each other. Okay, now see, and whereas the partners hereto mentioned have agreed to enter into a new partnership business, okay, of flour mill under the name and style of Messrs B&B Flour Mill, and whereas all the partners hereto mentioned above are mature and of sound mind, and to obviate all doubts with and desire to create a written document. Okay, now see, all the 4 partners will sign here. And now what will be written in the partnership deed? What will be the contents of partnership deed? Okay, see, Messrs B&B Flour Mill, the name of the business will be mentioned. Okay, now that the office of the business, where is the office of the business, where is the registered office of the business will be mentioned. Okay, see, the partner shall enter into the engagements or transactions on behalf of the firms only. Okay, now see, that the all partners mentioned above shall be working partners. Okay, there will be working partners. There is a concept of sleeping partners and working partners. Sleeping partner means those who will not be engaged in the activity, day-to-day activity of the business. Okay, they will only get their profit sharing. They will not work for the business. But working partner means they will be working full-time for the business. Okay, and shall attend the business activities of the firm diligently and honestly with all their proper duties of work as the partners may from time to time determine by their mutual consent. Okay, now see, now they have given their consent that all the partners will work properly, okay, as per requirement of the business with proper honesty. Now see, but Kamaljit Singh partner will be authorized signatory of the firm and will sign all the documents etc. of any type in regards of the business of the firm or for the smooth running of the business of the firm. Okay, he will also sign the required documents for obtaining any permission, NOC etc. from any government, private department on behalf of the firm. Now there is a partner. What's the name of the partner? Kamaljit Singh. Okay, now Kamaljit Singh will be the authorized signatory. Okay, whatever decisions they have taken, whatever mutual decisions they have taken, who will be able to sign on the document? Kamaljit Singh will sign on the document. Okay, he will be the authorized signatory. Authorized signatory means the person to whom firm has authorized to sign on the important documents. Okay, whenever you have to take any loan, whenever you have to take any NOC or permissions, okay, who will sign? Who will be the authorized signatory? Kamaljit Singh. Now what do we mean by authorized signatory? Without the signature of Mr. Kamaljit Singh. See, there was 4 partners. Okay, say for example Parminder Kumar wants to sign the legal documents. Can he do that? No, he cannot do that. Okay, Kamaljit Singh will be the authorized signatory. Okay, if Parminder Kumar signs the document, that document will not be valid because partnership deed has authorized Kamaljit Singh to sign the documents. Okay, I hope this is clear. Now the date of signing the deed. Okay, duration of the partnership deed will be mentioned. Now see, the most important thing is profit sharing ratio. Okay, now there are 4 partners. Okay, there are 4 partners. Now what will be the profit sharing ratio between them? It will be 25%. Kamaljit Singh will take 25%. Parminder Kumar will take 25%. Gurmeet will take 25%. Neelam Rani will take 25%. Okay, so in this total will be 100%. So all the 4 partners will share profits equally. Okay, this is the most important part of the partnership deed. Okay, profit sharing ratio. This profit sharing ratio should be clearly mentioned in the partnership deed. If no profit sharing ratio is mentioned, the partners will share profits equally. Okay. Now see, that the accounts of partnership shall be closed on 31st day of March every year. I have said, there is a calendar year, 1st January to 31st December, and financial year is from 1st April to 31st March. Okay, so they will be following financial year, where when a profit or loss account and the balance sheet shall be prepared, and the net profit or losses, as the case may be, of the partnership business will be divided among all partners in the manner indicated above. Okay, so if there is any profit, okay, they will distribute the profit in this profit sharing ratio. Okay, so I hope you have a clear concept, a clear knowledge of how a partnership deed looks like. Okay, so this is a legal document. See, this is in a stamp paper. Okay, so this legal document, it will be framed, okay, by the partnership firm, and all the partners will sign the partnership deed. Okay, all the partners will sign the partnership deed. There will be two witnesses, and see, this partnership deed will be notarized. Okay, notarized means you have to go to the court. You have to go to the court and you have to notarize this. Okay, so when a court has given you, when the court has notarized, it simply means that you have, this document is a valid document now. This document is a legal document now. Okay, and you have to file this document as per Partnership Act also. Okay, so I hope you have a clear knowledge, right, of how a partnership deed looks like and what are its practical importance. Okay, see, without partnership deed, so can I say partnership deed is a very important document. Partnership deed is a very important document for a partnership firm. Okay, now say for example there was no partnership deed. Now you may say, is it compulsory to make a partnership deed? No, if you want you can make, if you don't want you cannot make. Okay, but it is always it's always better to make a partnership deed, a legal document. Okay, say for example, now if there is no partnership deed, okay, and the partnership deed here allows Kamaljit Singh only to sign the documents, right? Now say for example, if there is no partnership deed, okay, this has been agreed orally. Okay, 4 partners decided that Kamaljit Singh will sign the legal papers. Okay, but there was nothing in written, there was no partnership deed. Okay, now what happens? Parminder Singh, okay, Parminder Kumar and Neelam Rani, okay, they did some fraud and they signed a legal document and they have taken money from anyone. Okay, they have taken loan in the name of business, and the other 2 partners, they do not know. Okay, now can Kamaljit Singh and Gurmeet Singh file a case against them? Okay, no, they cannot do that because they don't have any legal partnership deed. Okay, so this is the importance of a partnership deed. I hope this is clear to you now. Now let's see the contents of partnership deed. Contents of partnership deed. Contents of partnership deed. Okay, the first will be profit sharing ratio. We have seen, right, in the actual partnership deed there was profit sharing ratio mentioned. The second will be capital contribution. Capital contribution by each partners. Okay, now the partnership deed will mention the capital contributed by the partners. Okay, now you have an idea of a business, you want to start a business, the main thing you have to do is you have to introduce capital. Okay, so each partner will introduce capital, and the amount of capital the partner has introduced, it will be clearly mentioned in the partnership deed. Okay, salary to partners, if any. Okay, so if they have decided to give salary to a partners, the salary, the amount of salary also, the amount of salary will also be mentioned in the partnership deed. Okay, now interest on capital, also interest on capital. Okay, now see, a partner has contributed capital to a business. Okay, now in case of partnership firm, partner will be entitled to get interest on capital. Okay, see, this basically will be, say for example, there is 2 partners. Okay, and this is the business. Now they have introduced capital to the business. Okay, now this capital will be a liability for the business. Okay, so when the partnership firm will cease to exist, means when the partnership firm will be dissolved, it will be the business will come to an end. Okay, the capital contribution, the partners have contributed in the business, they will get it back. Okay, now see, the partners has contributed capital in the business, so they will be entitled to get interest on capital. Okay, so basically this interest on capital will be a gain for the partners. Okay, interest on capital will be a gain for the partners. Now the fifth point will be drawings. Okay, drawings, sorry, not drawings, interest on drawings. Okay, interest on drawings, interest on drawings. Okay, interest on drawings. Now what is interest on drawings? What is drawings? First, we know that we have discussed, right, in the basic class that a proprietor has introduced capital into the business and he has withdrawn money for his personal use, withdraw money or goods for his personal use. Okay, so what will happen? His capital will come down. Okay, if he withdraws any amount or any goods. Okay, if he withdraws the cash balance will come down, and if he withdraws any goods, his purchase will be reduced. Okay, likewise in partnership firms, okay, partners will normally introduce capital. Okay, so they will be also allowed to make some drawings from the business, okay, for their personal use. Okay, now business is allowing them to withdraw money for their personal use, so partnership firm will basically charge interest from them. Okay, partnership firm will charge interest from them. Okay, now the next point we will discuss is, see, this is the contents of profit and loss account. Okay, now this partnership deed will be what? It will be in written and registered. It will be in written and we have to register under the Partnership Act 1932. Right? As I have told you, if these things are on oral basis, okay, will it have any legal compliance? Will it have any legal obligations? No. Okay, if a partner commits any fraud, okay, the other partners will not be able to do anything against him legally. Okay, so this partnership deed is very important too. It should be in written and it should be registered under the Partnership Act 1932. Okay, simple. Now let's discuss in details what is interest on capital. Okay, interest on capital. Okay, so what is interest on capital basically? Okay, see, interest on capital is justified, okay, when the partners contribute unequal amount of capital, okay, but profit sharing ratio is equal. So basically what happens is, there may be a partner called A, B, C and D. Okay, now see, A has contributed 1 lakh rupees, B has contributed 2 lakhs, this has contributed 1 lakh 50 and he has contributed 3 lakhs. Okay, now see, A, B and C, they have contributed lesser than what D has contributed. Okay, now what will happen? The partnership firm will give interest on capital to the partners. Okay, the capital which they have invested in the business, in the partnership firm, they will get capital interest for that. Okay, likewise in drawings, if they have withdraw any money, they will have to pay interest on drawings. Okay, so this interest on drawings will be gain for this interest on drawing will be basically loss for the partners. Okay, I hope this is clear. Now I have told you, right, why partnership deed is important. Okay, so let's write it. Why is partnership deed important? Okay, this one is very important. Okay, you can get it in your objective. Okay, now after class 12, when you prepare for CUET entrance exam, okay, this topic is very important. Okay, why is partnership? I have seen the syllabus. I have some students who are taking tuitions from me for the entrance exam. So in their syllabus of the exam, of the entrance exam, there is one question called why is partnership deed important? Okay, so why partnership deed is important? First of all, to avoid misunderstandings. Okay, there may be misunderstanding between the partners. Okay, so if a particular thing is clearly written in the partnership deed, there will be no misunderstanding. Okay, the second one is dispute resolution. Dispute. Okay, what is the meaning of dispute? Dispute means, okay, some arguments between the partners. Okay, some misunderstandings or disputes between the partners. Okay, so partnership deed will help you resolve the disputes. Okay, so right, for this, disputes can be resolved with the help of partnership deed, P deed. Okay, which would not have been possible if there was no partnership deed. Okay, so in future, okay, you will go to a big position, or you will have good knowledge of accounts or Companies Act, okay, or Partnership Act. So if people ask you, we are planning to start a partnership firm, okay, the first question which you should have is, do you have partnership deed? Have you prepared the partnership deed? Okay, so partnership deed is very important. Now the partners will not be able to do any fraud, okay, any willful misstatements, or they will not be able to cheat any other partners, okay, if there is a valid partnership deed. So I hope you are convinced that partnership deed is a very important document for a partnership firm. Okay, now next point, which is very important. Okay, points to be remembered. Points to be remembered. Okay, this is very important. Very important. Okay, points to be remembered. The first point is, if partnership deed is silent, okay, share profits equally. Okay, you will have a dedicated question in this topic. Okay, if partnership deed is silent, what we will do? We will share profits equally, okay, between the partners. The second point is, if partnership deed is silent, okay, no interest on capital and drawings. Right, I have shown you how a partnership deed actually looks like, right, between the four partners. So we did not see any written thing related to this capital and drawings, right? Capital and drawings. So partnership deed is silent. Okay, nothing is mentioned in the partnership deed. Okay, so if nothing is mentioned in the partnership deed regarding the interest on capital and drawings, so there will be no interest on drawings. Okay, so if they have introduced capital into the firm, they will not get any interest, and if they have withdrawn any money from the business, okay, in the name of drawings, there will be no interest on drawings. Okay, the third point is, if partnership deed is silent, okay, if partnership deed is silent, no salary, no remuneration, no commission to the partners. Right, again, in the partnership deed which we have seen, there was no there was nothing mentioned regards to salary and remuneration or commission to our partners. Okay, so partnership deed was silent. If nothing is mentioned, it means partnership deed is silent. So if partnership deed is silent, no salary, commission or remuneration will be given to the partners. Okay, so let's solve one question with this point. Okay, in this point there is dedicated questions. Okay, in exams you will get to see 3 marks question in this topic only. Okay, very simple topic and very easy topic. So let's see the question for this. Now let's write one more point, okay, before moving to the questions. If partnership deed is silent, interest on partner's loan will be 6% per annum. Okay, so there can be a situation, okay, where partner has given loan to the firm. Okay, can partner give loan to the firm? case, obviously the partner can give loan to the firm and the partnership firm can take loan from the partners. Okay, so now if nothing is mentioned in the deed regarding the interest on partner's loan, what will be the interest rate? It will be 6% per annum. Okay, now but if the partnership deed has mentioned 10%, okay, will we allow 10% interest to partner? Yes. Okay, provided it should be specifically mentioned in the partnership deed. Okay, if nothing is mentioned, it will be 6%. Okay, I hope you are clear with this. Now let's try to understand one more concept, okay, before moving to the questions. It is regarding the profit and loss appropriation account. Okay, now let's try to understand what is a profit and loss appropriation account. Okay, in case of partnership, the profit earned by the firm is distributed among the partners in the new profit sharing ratio. Okay, this is the short form of PSR. PSR means profit sharing ratio. Okay, divisible profits is subject to certain adjustments such as interest on capital, interest on drawings, salaries, commission to partners. These transactions are not charged to what? These transactions are not charged to profit and loss account. Okay, these transactions are not charged to profit and loss account. So they are not mixed up. They are not mixed up with general trading transactions. Okay, accordingly, an additional account known as the P&L appropriation account is prepared. Okay, it is an extension of the profit and loss account. This is important point. Okay, this is the extension of the P&L account. The net profit disclosed by P&L account is transferred to this account before distribution of profit among partners. Okay, now see what happens normally. Okay, now when you prepare your profit and loss account, okay, this will be the gross profit transferred from the, this is the gross profit transferred from the trading account. Okay, now you will have the trading expenses in the debit side, right? Say for example salaries. Now this salaries is not the salaries paid to the partners. Okay, this salaries is paid to the employees of the firm. Okay, to, you may give some rent, you may pay some rent, to office expenses. Okay, to other expenses, you may have other expenses. Okay, now see what happens. Now the net profit, you will calculate the net profit. Okay, what is the main motive to prepare P&L account? To calculate the net profit. Okay, now the partnership firm has given salaries, interest on capital. Okay, they have collected drawings, interest on drawings from the partners. Now where will all these items be shown? It will be shown in the P&L appropriation account. Okay, because why we have to prepare P&L appropriation account? Because P&L appropriation account will relate, okay, to all the transactions. We will transfer all the transactions related to the partners in the P&L appropriation account. Okay, because interest on salaries, interest on capital, okay, then after that interest on drawings, salaries, remuneration to the partners, these are not the expenses which are required to run the business. Okay, now see rent. If you don't pay the rent, okay, this is an obligation, you have to pay the rent. Okay, and you have to incur office expenses, you have to incur other expenses, you have to pay salary. Okay, so these all expenses are needed to what? Run the business. Okay, so these are all trading expenses. But interest on capital, okay, salaries to partners, these are not trading expenses, so we have to prepare separate P&L appropriation account. Okay, now see what will happen. Now we will prepare profit and loss appropriation account. Okay, P&L appropriation account. This will be your particulars. Now see what will happen. This will be a particulars amount. Okay, now the profit which you have calculated in the P&L account will be transferred to the P&L appropriation account. Okay, by profit and loss account. Net profit. Okay, if there is any loss, it will be here to net loss. Okay, now see, now the rule will be same as P&L account. Okay, debit we'll write all the expenses part in the debit side and all the income part in the credit side. Okay, debit and credit. Now see, when a firm has given interest on capital to a partner, it is a gain for the partner, but it is a loss for the partnership firm. Okay, this P&L appropriation account is prepared from the point of view of firm, from the point of view of partnership firm. Okay, so interest on capital paid to a partner is basically a loss for the partnership firm. Okay, so we will write it in the debit side to interest on capital. Okay, now salaries, remuneration, commission paid to a partner is a gain for the partner, but it is a loss for the partnership firm. Basically, loss means the profit of the partnership firm is reduced. Okay, so we'll write in the debit side to salary, remuneration, commission. Okay, now if partnership deed has mentioned regarding the interest on drawings, okay, interest on drawings is a loss for the partner. The capital of the partner will reduce, but it is a profit, it is a gain for the partnership firm. So we will write it in the credit side. Okay, because partnership firm is what? Partnership firm is charging interest from the partners. Okay, by interest on drawings. Clear? Okay, interest on drawings. Now see, there is one more concept of interest on partners loan. Interest on partners loan. Okay, interest on partners loan. Now, do you think interest on partners loan is an item of P&L account or P&L appropriation account? Okay, partners on loan, interest on partners loan is an item of P&L account or P&L appropriation account. I would say the interest on loan to a partner is an item of profit and loss account. It is not an item of P&L appropriation account. Okay, so to interest on partners loan. Okay, why is interest on partners loan an item of P&L account and not P&L appropriation account, although it is an item related to partners? Because see, this interest on partners loan, okay, is a charge to P&L account. Okay, see, when you have taken any loan from a bank, okay, you have to pay interest. So interest is your expenses. Okay, that will be called as finance expenses. Okay, so interest on loan paid to any bank will come to your P&L account, right? Likewise, interest on partners loan, okay, it's also a expense for the partnership firm. Okay, so it will come to the P&L appropriation account. Okay, sorry, it will come to P&L account. It will not be debited in the P&L appropriation account. Okay, so you have to remember this thing. Now see, we are done with P&L account. Now what is the final, how will we close the P&L appropriation account? See, profit has been transferred from P&L account. We have taken the interest on drawings. Interest on drawings is a gain, or the gain, all the gain item will be written in the credit side. Okay, interest on capital, we are allowing interest on capital to a partner, so it is a loss. It has been written in the debit side. Salary, remuneration and commission is also a what? Loss. Okay, the profit of the firm is reduced, so it will be written in the debit side. Now we'll be left with some balance of the profit. Okay, so where will that balance profit go? It will go to profit transfer to partners capital account. Okay, so the balance of the profit will be transferred to partners capital account. Okay, now who is the owner of the business? Who is the owner of the partnership firm? The partners are the owner of the partnership firm. Okay, so the whatever profit they have earned during the year, it will be transferred to their partners capital account. This partners capital account we will prepare in the coming chapters. Okay, so it's very simple, it's very easy. Okay, so now this way your partnership P&L appropriation account will be closed. Okay, there will be no balance because the leftover balance is transferred to capital account. Simple. Okay, now let's try to solve some questions relating to P&L appropriation account. Okay, dedicated questions to P&L appropriation account. Okay, so this is your question number 1 of chapter number 1. Okay, now see what is the question saying. W and S are two partners. Their profit and loss appropriation account was as follows. Okay, so this is their profit and loss appropriation account. Okay, so net profit by profit and loss account. Net profit has been transferred from P&L account 1,50,000. Okay, now the partnership firm has allowed salaries. There are to W is 15,000 and salary allowed to S is 20,000. Okay, now interest on capital at the rate 5% has been allowed to W, and interest on capital 12,000 has been allowed to S. Okay, now to interest on W loan at 6% has been given to W. Okay, now the leftover profit has been transferred to C. The profit transferred to W and S. This is basically their capital account. Okay, and they have closed the P&L appropriation account. Okay, now see what's the question saying. There is no partnership deed. This is important. Okay, there is no partnership deed. Calculate the correct amount of profits. Okay, that means this profit is not correct. Not correct. Okay, which must be distributed between A and B through profit and loss appropriation account. Okay, give reason in support of your answer. See, what is the first line of the question saying? There is no partnership deed. There is no partnership deed. Okay, so we have discussed that if the partnership deed is silent, no partnership deed means the partnership deed is silent. Okay, so if the partnership deed is silent, we will share profits equally. Okay, see, in this question, is the profit shared equally? No. 87,000 is the profit. If you divide by 2, it will be 43,500. So each partner should get 43,500, but W is getting 52,200, S is getting 34,800. Okay, so this is not correct. Now, what was the second point? If partnership deed is silent, no interest on capital and drawings. Okay, no interest on capital and drawings. Okay, so no interest on capital and drawings. So let's see in the P&L appropriation account. Okay, see the P&L appropriation account. In the P&L appropriation account, they have given interest on capital. So this is also not correct. This is also not correct. Okay, see, this is also not correct. Now the third point, we are done with 1, 2. The third point, if partnership deed is silent, no salaries, no remuneration, no commission to the partner. See, the question has clearly mentioned that there is no partnership deed. There is no partnership deed, but the partnership firm has given what? The partnership firm has given salary to a partner. They have given salary to a partner. Okay, so this is also not correct. Okay, this is also not correct. Okay, so the fourth point, if partnership deed is silent, interest on partner's loan will be 6% per annum. Interest on partner's loan will be 6% per annum. Okay, 6% per annum. Now the partnership deed is silent. Okay, and interest on loan has been allowed at 6%. So you may say this is correct. You may say this is correct. You may say this is correct. But I would say this is not correct. Not correct. Why? Because I have told you that interest on partner's loan is an item of profit and loss account. It is not an item of P&L appropriation account. Okay, so this item should not be debited in the P&L appropriation account. Okay, now see what has happened. Because of this, our P&L appropriation account, the profit of the P&L appropriation account is not correct. Okay, so we have to find the profit, the correct profit of P&L appropriation account. Okay, so let's try to solve it in a correct way. Okay, now see, we have to prepare profit and loss appropriation account. We have to prepare profit and loss appropriation account. Here will be your particulars, amount, particulars, amount. This will be the debit side, this will be the credit side. Okay, now let's see the profit and loss appropriation account given in the question. Okay, so see, this one was not correct, this one was also not correct. Okay, this was also not correct. So the partnership deed is silent, salary will not be given, so we will not debit this amount in the P&L appropriation account, the correct P&L appropriation account which we prepare. And interest on capital also will not be allowed, so we will not mention this interest on capital on the P&L appropriation account. The correct P&L appropriation account we prepare. And this is also not correct, so we will not mention this in the correct P&L appropriation account we prepare. Okay, now see, we will look at this. We will look at this P&L appropriation account and we will have to prepare the new. Okay, so what is the first thing in the credit side? Profit. Okay, by profit and loss account, net profit. So what is the amount? 1,50,000. Is this 1,50,000 correct? No, it is not correct. Why? Because see, when you prepare your profit and loss account, okay, when you prepare your profit and loss account, you will have your GP here. Okay, say for example the GP is 1,50,000. Now see, in the question, interest on loan has been debited in the P&L appropriation account, okay, which simply means that interest on W's loan, okay, has not been debited to the P&L account. Okay, so this profit which has come from the P&L account is not correct, because this, out of this 1,50,000, okay, out of this 1,50,000, this interest should be debited in the P&L account. So what should be the actual profit of the P&L? It should be 1,49,000. Okay, so this P&L, the profit of this P&L also is not correct. Okay, so see, it should come in the P&L account. Okay, it should come in the P&L account to interest on W's loan 1,000. Okay, so the net profit will be 1,49,000. Okay, so this net profit will be transferred to what? This will be transferred to P&L appropriation account. Okay, P&L appropriation account. Clear? So can I say this will be 1,50,000 minus 1,000. Clear? Okay, now let's look at the P&L appropriation account given in the question. See, this is not allowed, so we will not debit anything in the name of salary because it is not allowed. Okay, interest on capital also will not be allowed, will not debit anything, and we have made the adjustment for interest on W's loan. Now whatever profit is left, that will be transferred to the partner's capital account. Okay, so to profit transferred. Okay, so what is the name of the partner? W and S. Okay, so W and S. Now the partnership deed is silent, nothing is mentioned regarding the partner's profit sharing ratio. So I have told you what was the rule. If nothing is mentioned, we will share profits equally. Okay, we will share profits equally. So what is the divisible profit? 1,49,000 is the divisible profit. Okay, this will be shared between the two partners. If I divide by 2, I will get the profit for each partner. Okay, so if I divide by 2, the answer will be 74,500. So each partner will get 74,500, 74,500. Okay, so in this way my P&L appropriation account will be closed. Okay, simple and easy. Okay, very simple and very easy. Right, now we have to give reasons. See, the question is mentioned now, give reasons in support of your answer. Give reasons in support of your answer. Okay, so let's try to give some reason why have we prepared the P&L appropriation account the way we have prepared. Okay, so the first reason, okay, you will say note. Okay, notes, you may get this in your exam for 3 marks. Okay, very important concept. The given profit and loss account, the given profit and loss appropriation account, the given profit and loss appropriation account in question is not correct, because in the absence of partnership deed, the following rules are applicable. Okay, the following rules are applicable. What is the first rule? What was the first rule? Profits to be shared equally. See, profits to be shared equally. Okay, so what you will do? You will, let me just copy this. What will you do? You will wait, something is going wrong. So let's write it again. Okay, so first one will be, if partnership deed is silent, if I will say P deed, okay, P deed is silent, profits and losses must be shared equally. Okay, this is the first point. What is the second point? What was the second point? No interest on capital, no salary and remuneration. Okay, so if partnership deed is silent, no interest on capital, okay, and no interest on drawings. Okay, third point, if partnership deed is silent, no salary, remuneration and commission to any partner. Okay, what was the fourth point? Interest charged. Okay, interest charged on W's loan at the rate 6% per annum is correct, okay, but the interest on W's loan will not be shown in the P&L appropriation account, right, as it is charged against profit. That is, it is an item of P&L account. Okay, so this way your question number 1 is completed. Okay, so we will solve more 2 questions. Okay, we'll solve more 2 questions with this concept, in this concept. Okay, so now, so students, let's now solve this question number 2. Okay, question number 2, page 52. Now let's read the question. K and M are partners without any partnership deed. Okay, so see, there is no partnership deed. Okay, no partnership deed. So whenever a question says no partnership deed, 4 things should come to your mind. Okay, first is, if there is no partnership deed, profit and losses to be shared equally, no interest on capital or no interest on drawings, no salary, remuneration, commission, and interest will be allowed at the rate of 6%. Okay, they introduced capital of rupees 50,000 and 35,000 respectively. K introduced how much? K introduced 50,000 and M introduced 35,000 respectively. On 1st July 2009, K advances rupees 15,000 as loan to the firm without any agreement as to interest. See, now K has given loan to the partnership firm, okay, on 1st July 2009 without any agreement as to interest. Okay, now if there is no agreement, if there is no partnership deed, interest will be allowed at the rate 6% per annum. Okay, interest will be allowed at the rate 6% per annum, and it will be an item of profit and loss account. Okay, now the profit and loss account for the year ended 31st December 2009. Okay, so year is ending on 31st December 2009, discloses the profit of rupees 30,000. Okay, but the partner do not agree upon the question of interest or division of profit. Okay, but the partners, okay, they did not agree upon the question of interest or division of profit. Okay, they have not agreed that the amount of interest and profit divided to the partners is correct. Okay, now what is the requirement of the question? You are required to divide the correct profit between partners, giving reasons in support of your answers. Okay, now we have to calculate the correct profit. Okay, now see, let's solve this question. Okay, we'll have to prepare profit and loss appropriation account. Profit and loss appropriation account. Here you'll have your particulars, debit side, amount, particulars, amount. Okay, now see, the first item which we will have to provide is profit. Okay, now profit will be transferred from P&L account by profit and loss account. Okay, because this credit side will, all the profits related to the partnership firm will be written in the credit side. Okay, so net profits. Now see, this 30,000 is given in the question. Okay, do you think this 30,000 is correct? Okay, do you think this 30,000 should come here? No, this 30,000 will not come here. What's the reason? Because this interest, see, this interest, okay, this interest is not provided in the profit of 30,000. Okay, see, the question is giving us a hint that question of interest. Okay, so we have to make adjustment on the interest. Okay, so what will be the interest amount? Let's calculate. Okay, interest on loan. How much loan he has given? He has given loan of 15,000. Okay, 15,000 into 6%, 60,000 into 6%, and see, now he has given the loan on 1st July 2009. Okay, see, 1st July 2009. So year is ending on 31st December and the year is starting on 1st Jan. Okay, he has given loan on 1st July. Okay, so interest will be calculated for the period starting from July to December. So how many months are there? July, see, he has given on 1st July now, so interest will be calculated for the whole month of July. Okay, July, August, September, October, November and December. So 1 month, 2, 3, 4, 5, 6. So interest will be calculated for how much months? For 6 months. Okay, interest will be calculated for 6 months. Now see, 15,000 is the amount of the loan, 15,000 into 6% is the rate, because the partnership deed is silent, and interest is to be calculated for 6 months. Okay, divided by 12. Now what will be the amount of interest? 15,000 into 6% into 6 divided by 12. So interest amount is 450. Okay, rupees 450. Now why I have done this? Why have I written 6 divided by 12? Because this means whole year and this is for 6 months. See what will happen. Okay, 15,000 into 6%. Okay, this will be for the whole year. Okay, this 15,000 into 6% will be for whole year, 900 rupees. Right, now this is for the whole year. So if I divide by 12, I will get for 1 month. Okay, if I divide by 12, I will get the interest for 1 month. Interest for 1 month. Okay, so if 75 is interest for 1 month, so I'll have to into 6 to find the interest of 6 months. Okay, so if I do into 6, it will be 450. So see, this is what we have done here. Okay, this is what we have done here. This is for the whole year. Okay, this is for the whole year, and if I divide by 12, I'll get the interest amount for 1 month, and if I into by 6, I'll get the amount for 12 months. Okay, so the interest amount is 450 rupees. Now see, the profit is 30,000. The profit is 30,000. So this 30,000, okay, we have to make treatment for the interest on this 30,000. Okay, so what will be the profit transferred from P&L account? 30,000 minus 450. Okay, so what will be the amount? 30,000 minus 450 will be 29,550. 29,550. I hope you have understood this. Okay, let me repeat it again. Okay, so when you prepare your profit and loss account, you will have your GP here, gross profit. Okay, and see, the interest on loan is an item of P&L account. I have told you in the previous question now. So the interest would come here. Interest on who is giving the loan? K. Interest on K's loan. Okay, so this interest of rupees 450 should come here. Okay, so accordingly my profit will be what? My profit will be reduced by 30,000. Okay, so if the GP is 30,000, so my profit will be how much? 29,550. Okay, so now this profit which I have calculated from the P&L account will go to your P&L appropriation account. Okay, I hope this is clear. Okay, now there was no partnership deed. Okay, and there is nothing mentioned about the interest on loan. Okay, sorry, interest on drawings, interest on capital, interest on salaries and remuneration. Okay, so this is the final profit to be transferred to the partners capital account. Okay, so the remaining profit, this will be transferred to profit transferred. Okay, there are two partners, K and M. Okay, so this will be transferred to K and M. This will be transferred to their capital account. Okay, so 29,550. Okay, now there is no partnership deed, the partnership deed is silent. So I have told you that if the partnership deed is silent, we will divide the profit equally between the two partners. Okay, so each partner will get 14775. Okay, so 14775, 14775. Okay, so this way our P&L appropriation account will be closed. 29550. I hope this is clear to you. Okay, very simple. If you want, you can copy. Okay, very simple. Now we have to give reasons why we have make the P&L account, P&L appropriation account, okay, the way we have calculated. So what will be the answer? That's right. Okay, note, in the absence of partnership deed, the following rules are applicable. Following rules are applicable. Okay, the following rules are applicable. What was the first rule? No salary is allowed to partners. Number 2, no interest on capital and no interest on drawings. Okay, third point, profit and loss must be shared equally. Okay, and what was the fourth point? Interest on cash loan is calculated at the rate 6% for how much? 6 months, because loan was given on 31st December. So loan will be given for 6 months, 31st December to 1st July to 31st December. Okay, so only 6 months, so we'll calculate for 6 months. Okay, that is 15,000 into 6% into 6 by 12. This will be how much? 450. It's equal to 450. Hence, the same will not be shown in P&L appropriation account. Okay, as it is charged against profit. That is, it is an item of P&L account. Okay, so I hope this is clear. Okay, question number 2 also done. So now let's move to question number 3. Okay, so now let's move to question number 3. Wait, just move this.